today's session of Visual JForex, I will be explaining to you the use of indicator named Butterworth filter. This is an technical indicator which is derived from the commonly used method in the physics, and in Butterworth filter we try to plot the graph which cancels out the noise, and it is going to provide us a smooth graph which is basically maximally flat. So here in today's session we will see how we can utilize this indicator to design and develop the algorithmic setup on the Visual JForex platform. Then we will be running it on the JForex platform for finding the optimum entry and exit point. So here this is a part of the ongoing series in which we are taking a look on the various indicators. Now this indicator is classified under the other section, and it's Butterworth filter. Here we don't really have the description, so we straight away head to the Visual JForex platform developed by Dukascopy Bank SA. You can find these indicator blocks amongst other indicators listed here, and then we have to customize this block as per our requirement. Depending on our input parameters, we will be getting the output, which then can be utilized to set the conditions as per our requirement to carry out the trading on our behalf. So here we have to first define the default instrument, and then the candlestick period, then the look back period, and the time period for which the calculation is going to be done, or you can say the amount of candle which will be taken into consideration while calculating the final output value for this Butterworth filter. So we will plot this on the chart also. Here this is the Euro USD chart on the hourly time frame, and I have already plotted the Butterworth filter. This is the default setup where we are taking into consideration the 34 candlesticks of 1 hour each for the Euro USD. And as you can observe here, the plotting is really smooth, and it basically tries to cancel out the noise, the frequent moves, and it gives us an sound idea of the trend of the underlying instrument. Whenever we see that the price jumps from one side to another side, then in due course of time, if the price action is able to sustain itself, we get this curve. And why this is preferable to say the moving averages is because we get a lot more smoothing, and of course the indicator is fairly responsive, and depending on the time horizon you are using, you can fix it, or you can adopt it as per your needs. So it will be responsive if it is used with lower time horizon, and there will be some lag if we increase its time horizon. So depending on how we customize it, these indicators will give us the different output values. Now coming to its use to find out the trading opportunities. One of the commonly used method is to go for the fresh trade whenever there is a trend reversal, whenever we see that the prior trajectory changes, and the Butterworth filter take the fresh turn to the opposite side. I think that is one of the most preferable point in time to go for the fresh trading opportunity. As you can observe here, we saw this Butterworth filter graph bending on the downside, and then if we had gone in for the sell trade, we would be in profit. But that's not the case always. Here you can see that this Butterworth filters graph bent on the lower side, but then without any profit. We would have actually ended up in loss if we had gone for the sell trade anywhere closer to this uh, consolidation, closer to 1.176. So it depends, and never everything is certain. So because of that we will have to go with the setup in which we will be trying to minimize our losses in case we happen to be on the wrong side of the trade, and then we will be trying to maximize our profit in case we happen to be on the right side of the trade. So using that method we will indeed be making profit regardless of any particular trade ends up in profit or ends up in loss. As you can see here, we might have ended losing money, but here we would have made a good amount of money. And then here it didn't really move much, but then it was a small move on the upside, and then this fall. And if we consider the prior price action also, here you will see that sometimes it sustains for far longer time horizon, whereas on the other times you can see that the reversal happens in quick succession. So we have to see how we can customize these indicators, but as the things stand, this is an extremely useful indicator, and here you can basically get the idea without much of a noise of the trend change in the underlying instrument, and that's why this indicator is considered mostly better compared to the moving averages, as there is a lot more smoothing, and we see these clear cut curves which gives us an idea whether the underlying momentum has shifted to the bullish side or the bearish side, and then accordingly we can act for any particular opportunity in the underlying instrument. So we go back to the JForex board on which we have to define these input parameters, and then depending on the input parameters we will be having the output value provided to us. Now coming to the time period for the candlestick, it basically depends on what is your time horizon for the trade. If you want to look for the scalping kind of opportunity, then even you can go for the time horizons like 5 minutes or 10 minutes or say 15 minutes. So you can use smaller time horizons, and then you can design the system for scalping opportunities in which you will have multiple trading signals generated during the day, and you can be in position to go for the fresh trading opportunities as and when things look favorable enough for the new trade. But if you want to trade with longer time horizons in mind, then I think for swing trading objectives, it's better to use the longer time horizon like 4 hourly or even daily. So this is how the 4 hourly will look like, and you will see that there is no particular you can say ideal candlestick period. It basically boils down to your choice, and you have to make an informed choice after taking into consideration all the other parameters, and after duly observing the chart and then making your mind for what kind of time period which will be suitable to you. So in today's session, for example, we will take the time period for calculation of this Butterworth filter at 30 minutes. Look back period can be 0, or we can go back in time, for example say 1, 2, 3, and so on. So whatever is the look back period, you will be getting the data retrieved for that particular candle, and you will have that output value for the Butterworth at that point in time. So for example, if I take 3 as our look back period, then we will be getting the data which was the output for Butterworth filter 3 candlesticks period back of 30 minutes each, that is like 1.5 hours. Then how many candlesticks price moves you want to take into consideration while calculating the Butterworth. Now this default setup is of 34, but you can always change it as per your requirement. Suppose if we want to change it, then we can do that. We can reduce it or increase it. Suppose if we make it 20, then the 20 hours Butterworth filter plotting will look something like this. And if we again change the charting to 30 minutes, as we have taken the 30-minute as our choice for the calculation of the candlesticks period. So here we have these plotting being done on the 30-minute time period, while the total candlesticks being taken into consideration for calculation of this Butterworth filter are 20, and you, if need, you can make it even 200. All you have to do, okay, maximum is 100, so we can't go to 200 really, but we can make it like 100, and then you will have a lot more smoothing in your plotting. So this is how the 100 time period calculation for the Euro USD of 30 minutes each will look like. And as you can see, we have lot more smoothing, and you get the idea for trend change on the relatively longer time horizon, and you get to decide whether this trend is going to last for good enough time, and then you can trade accordingly. Suppose if we make it hourly, the plotting will look something like this. So it's important to do the experimentation and then see what works and what doesn't really work, and accordingly you can decide to go for the default time of 34, or you can change it to the desired value after your observations. So let me restore the plotting for 30 minutes candlestick each. So depending on these input parameters, you will be getting the output value, and then these two important settings also need to be kept in mind. One is that on which side you want the calculation to be done, whether on the bid side or on the ask side. There will be slight difference in the output value because of the spread. And coming to the price which will be taken into consideration for calculation of Butterworth indicator, usually it is the closing price, but as I have said in the prior sessions also, we can always change this applied price, and we have all the options provided to us. So if you want to use open price, you can do that. I will do some editing on the plotting here, and you will see how this plotting differs whenever we change this applied price. So here when I choose open price, it has gone slightly higher. If I use high price, again the Butterworth filters plotting has gone higher. If I use low value, then it will go down. Here it has gone down. Median price will look something different, and so do the typical value. So depending on what is the applied price for calculation of the Butterworth filter, you will have the difference in the plotting, and that's why it is important to see what is the most appropriate setting while taking into consideration the type of price which will be used for this indicator block. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead. Goodbye.